Hi all, good day. I'm Lakshmi Priya. I have started this video with the idea of explaining answers for the past year question papers in a very easy and simple manner relating to the subject strategic management and business valuation. We have this subject in ICMAI Final Stage 4 paper in syllabus 2016. I hope that my way of teaching will surely benefit and build confidence in facing the paper. All the best to you and myself for this beautiful journey. Thank you. Now, let us begin the topic. An important concept we come across in strategic performance management and business valuation is P by E ratio. So, here you will understand what is called as price earnings ratio, and I will also give you a clue to remember this ratio. When it comes to the explanation part, I will explain you what are the elements of this ratio. Say for example, if a company is trading at rupees 25 per share, which means the market price of this share, say it can be Wipro, it can be L&T, and its earnings over the last 12 months are rupees 1.35 per share, then P by E ratio for the stock is very simple, which is 25 divided by 1.35, which is the market price of the share divided by earnings per share. So this particular example is a very simple example from a layman point of view. And in the next slide, I will explain you what is the components of this ratio and details of this ratio. Price earning ratio is equal to market price per share divided by earnings per share. So, regarding the clue to remember this ratio, price earning ratio, let me give you a simple technique. First, the price here represents the market price of the stock. So, price, market price is the first one. Price represents the market price of the stock, which comes to the numerator of the particular fraction function. And the next word is earnings. Earnings represents the earnings per share. So this comes as the next component. So basically it comes to the denominator. So this price comes to the numerator and this earnings comes to the denominator. So now the formula goes like this: market price per share divided by earnings per share. Okay. So now I will explain what is this market price per share. Market price per share means the market value of the share. If L&T Larsen & Toubro's share is basically trading at rupees 900, then that particular value you need to substitute it in the numerator function. Next one, what is earnings per share? Earnings per share means the net profits, whatever is available to equity shareholders, divided by number of equity shares. Let me put it in a very easy equation. Earnings per share means total profits, whatever is left for the distribution to the equity shareholders, that divided by number of equity shares of the particular company. So here we derive like this: earnings per share is equal to the net profits divided by number of equity shares. If these two financials are arrived, then it is very easy to arrive at P ratio. So P ratio of ABC Limited or XYZ Limited, say for example, is 10, which means investors, that is people who are interested to invest in this company, are willing to pay rupees 10 for every rupee of earnings. This particular examples is very much aligned to the practical investors. So though we touch upon lot of theory aspects, I would like you to understand how this fits into a practical way of working as well. Hence I have updated this particular example. This particular slide you will be able to understand what is the formula for price earning ratio, how to remember this price earning ratio, and what is the simple understanding of this price earning ratio. This does not involve any major jargons or any terminologies. Let me go to the live example which you may come across in a examination. So in this particular tabular column, you can see three columns: particulars, XYZ Limited and ABC Limited. Okay, here the details we have is profits after taxes for XYZ Limited is 4 lakhs. Profit after taxes for ABC Limited is 1 lakh. Number of shares outstanding is 2 lakhs for XYZ Limited and 1 lakh for ABC Limited. Okay, you can just check out yourself. If we have these two financial elements, what we can find next is it is EPS, which is earnings after tax divided by number of shares. See, when you see this particular word profits after tax, it is very clear to understand or come to a conclusion that these are the profits left out for the distribution to the equity shareholders. And number of shares outstanding implies here the equity shares. So the formula is very simple. What you need to do, you have to just divide 4 lakhs and 2 lakhs. Similarly, 1 lakh divided by 1 lakh. So you should always remember that EPS is per share value. So here we get rupees 2, here we get rupees 1. Then once we get this market price per share, okay, or the stock, here we see 25 rupees for XYZ Limited and 12.50 for the ABC Limited. So it is very easy now, right? We have EPS in hand, per share in hand, market price per share in hand. So what we can find now, we can easily find out PE ratio, which is P here denotes the market price, which should come to the numerator. E represents the earning per share, which comes to the denominator. I think you're able to recollect my logic, right? So we will just have to understand that the answer should always be in times, because this is actually a ratio. Ratio is always measured in times and not in rupees. This is a very important point from examination point of view, because we tend to make mistakes by updating it as rupees and you might get a wrong answer. So students, you should be very clear with the word when it comes to ratio. It means that the answer is always in times. So here MPS is market price per share divided by EPS is earnings per share, which is 12.50. So market price is 25. That divided by 2 EPS, we get 12.50 for XYZ Limited. And for ABC Limited, it is very simple. 12.50 divided by 1, we get 12.50. So these are nothing but times. In this slide, you would have understood what is PE ratio, the example of a PE ratio from a layman point of view, as well as the clue to remember the PE ratio, which is very helpful, as well as a small tabular column which is representing the various elements of PE ratio, and we have finally arrived at the PE ratio. So thank you all, thank you my friends, thank you my students. I will be continuing a lot of concepts in this particular subject which will be helpful for your examination. See you in the next video. Thank you. Bye.